Let's start off with futures. Higher this morning, looking like it could be a strong start to Wall Street after a lot of weakness over the last week. What do you make of it?
So I think, Frank, obviously, I think over the last 2 years, I mean, the market's down at least 1%. And obviously, this so-called proverbial Santa Claus rally has been on the sidelines. And I think a lot of that has to do with where yields have been. The Fed has cut 3 times over the last quarter, 50 basis points in September and then 25. And the 10-year yield obviously has been around 4.5 to 4.6, kissed 4.63 just a day and a half ago. So for me, I think that has been what has been a little bit of an overhang on the markets, going into the new year. And I think the other piece is a little bit of a concern about inflation going forward. I think that's also been what's been spiking yields going into the new year.
All right, so a lot of talk about algos, low volume trading, seasonality. A lot of people worried about some parts of the market. I want to get your word of the day. How do you see today shaping up, or the rest of this holiday shortened week shaping up as we go forward?
My word of the day is patience. We're coming off 2 years of really spectacular growth. Obviously, the S&P is up over 20% this year, and it was last year. So as we go into the new year, new administration, there's a lot to kind of digest. The market is trying to figure out what will the tariff talk, what will that ultimately show up as? Are these more negotiatory tactics? Will they be implemented? So I think the market is trying to digest that. Also, we have a Fed that's less engaged. It's more of in a wait-and-see mode. We're also hearing language again about higher for longer, which we heard 2 years ago. So I think the market is trying to digest these 2 pills and ultimately figure out where we go next. But in earnest, obviously, earnings start in the next 2 weeks, starting with financials. I think that will be a catalyst going forward as we expect double-digit earning growth going into next year. So let's see how all these factors play out. But I think that's what we need to be patient going forward.
All right. So I want to see where are you going forward. Give us your pick for today, and why is that your pick?
So my pick is Palo Alto Networks. I just believe that cybersecurity, all the secular themes around cybersecurity still remain very strong. If I think about just the advance of large language models and AI, more sophisticated cyber attacks, I think CTOs are really busy ultimately trying to figure out what their businesses and enterprises need to protect them going forward. So for me, I really like Palo Alto as one of the best in breed in the space. And I just feel like cyber is just a ongoing issue, unfortunately, for many enterprises, and I think that's what's going to continue to move going into the new year.
So Palo Alto is certainly a leader in the cyber space, but I want to show a chart from the election. If you look at Palo Alto compared to the rest of the cyber sector, in this case, I'm using the CIBR ETF. It's a laggard since then. I'm not saying that's the ultimate period of time to look at this company, but certainly a big laggard. Does that concern you at all that maybe some of the money has gone from Palo Alto and CrowdStrike and other players after a number of issues, including the big IT outage for CrowdStrike and also platformization for Palo Alto, that seem to really turn off investors?
Yeah, so the new platformization strategy is obviously a new go-to-market strategy, which was different from obviously their process a little over 2 years ago. So I think for me, I think the market is trying to digest that strategy. It's starting to show improvements. It's obviously more of a long-run strategy for the company, but I think that is something that the market has obviously tried to figure out this year. Obviously, we've had very strong performance. I mean, the stock is up 25%. But I think as we move into the years ahead, I think Palo Alto will continue to be strong here.